Ladies and gentlemen, please welcome to the stage business anchor from China Global Television Network, Ms. Cheng Lei, and her panelists.
Everyone, welcome to the Finding Balance session. I'm Cheng Lei, and it's great to be here for the second time for my second FII. And what a topsy-turvy world it's been the past 12 months. Just to illustrate a few points in my work, last week I was at the Tianjin factory for Vestas, the wind turbine maker. Their Tianjin plant is now producing for Europe instead of the US because of the tariffs. And then the European plants are producing for the US instead. So no wonder shipping giants like Maersk have just lifted their guidance. I was talking to Haier, China's appliance-making giant. They were going to bring out a premium brand based on the General Electric appliances brand that they had bought. But they scrapped it because of concerns about perception and the tariffs. I have friends who work in wealth management in Singapore who are now very busy because of money going there from Hong Kong due to the social unrest. So that's just things that I run into as a business reporter. And of course, we're going to talk about how investors need to handle this need for balance in our world. You know, the balance between innovation and supervision, the balance between idealism and pragmatism, the balance between opportunities and political correctness. So I'm going to introduce my extremely esteemed panel now. To my left, Tidjane Thiam, who's the CEO of Credit Suisse, John Zhao, the CEO, founder, and chairman of Hony Capital, and Ralph Schlosstein, who is the president and CEO of Evercore, as well as Thomas Barrack, the executive chairman and CEO of Hony Capital. Thank you for joining us, gentlemen. So let me start by asking Tidjane, on a macro perspective, what structural changes are you seeing?
First of all, let me say how pleased I am to be here at the forum. It's my second participation. It's a very exciting event. To answer your question, there are a number of forces driving things. I mean, the first one is, as you mentioned, probably innovation and technology, in particular artificial intelligence, where you can see opportunities across the board, particularly in healthcare, where there are always new treatments being invented, but also transportation. I mean, things like drones have completely revolutionized the world. And I guess the place where you see that in the most visible way is the USA, and I think a lot of the US economy's strength is fed by innovation and by the consumer, but you also see it in China, very much so. You also see it across Asia. So, and we believe that those trends are there for the long term. You mentioned some of the short-term geopolitical tensions and uncertainties. We still believe that they don't change the long-term perspective on the growth potential, but technology, combined with also the demographic evolution that you see in certain parts of the world, with the West aging and the emerging markets being very young and very dynamic, all that creates a lot of investment opportunities.
John, come in on this, because I know your mantra is go east and go digital, which kind of ties in with what Tidjane was saying.
Right, I'm going to make an attempt to look at the world from a China-centric point of view. So there are three circles to review what had happened in the last 30 or 40 years. One, reform has been changing China. Now China is the world factory and the global market. Two, the rise of China is changing the world, so much so that there's a lot of geopolitical tension as a result of this rise, and that will continue. Three, and most importantly, technology, specifically mobile, internet, technology is changing humankind. So we actually benefited from these trends in the last 10, 30 years investing and made some money. And we're going to have to develop a view as to where we go next. Because what we see today is confrontation, decoupling, and deglobalization. My view, just jump ahead to future, is globalization 2.0, so that it is still building a interdependent, interconnected global village, but much more inclusive. Two, technological innovation is going to redistribute everything. And those are both opportunities, cross-board, and certainly if you hold on to old model for too long, risks.
Ralph, do you agree with that?
I do. I actually think that when we're on this earth 10, 20 years from now, we'll look back at some of the economic confrontations that we're having, both among countries and between those who are a little bit left behind right now. Today, much of that conflict is laid at the doorstep of globalization. And I actually believe quite strongly when historians look back 10 or 20 years from now, they're going to say that much more of it occurred as a result of technology than globalization. And globalization is going to actually make a comeback at some point because the interdependent world is something that really creates success and wealth for all nations. And right historically, until relatively recently, we lived in a world where companies competed based on the quality of their product, the quality of their service. Today, we run the risk of going into a decoupled or bifurcated world where companies are going to compete also on the basis of where they happen to be domiciled and where they, with whom they happen to be allied. And that will be a economic growth and wealth destroyer for the world, in my opinion.
Before we delve into that whole labeling phenomenon, let me ask you, Tom, you were saying that you're shifting a lot of your investments into digital assets. Can you elaborate on that?
Sure. I mean, I think the difficulty is listening to the great minds all talking about the dilemma that we find ourselves in, the social science of where we're going, the political dilemmas of nation states trying to fight for their viability in a technological era. It invades the simple things. If you just took real estate and finance, most real estate today suffers from an endemic obsolescence. It's functionally, it's physically, it's financially obsolescent to shared economies, to what's happening in front of us. So just in looking at stakeholders, besides the social and political side, I look and say it's really the evaporation of the nation state. What you now are going towards is a digital nation state. And the customers and the subscribers of the 5 large technology companies, if you took Apple, Google, Amazon, Microsoft, are larger than most of the large countries put together.
They're all American.
Right? They're not all American. Alibaba is a force of mankind.
It's listed in the US.
And that connectivity and what it delivers is the modern day nation state. From the Treaty of Westphalia in the 1600s, where people said, I need a currency, I need protection, I need commerce, I need education, I need healthcare. Today, it can all be delivered on your iPhone. So I look at it simply and say, who's the customer for somebody like us in the future? The customer are those logos. and to be smart enough of what we're all trying to navigate here, to say, how is an investor, and I'm not an investor, I'm an owner, so I'm trying to figure out how do I create value over 10 years in investment that doesn't get disintermediated by technology within that 10 or 15 year period? My counterparty better be those 5 logos, because those 5 logos will surpass political intervention, legal intervention. Uber defied all the regulatory environment around it by the force of its people. So I think we're going into a digital era where connectivity, telephony, radio cell towers, microcell towers, fiber networks, when you listen to what's happening in India and the new electricity, the new railroad, the new printing press is that for us as economic stewards, they are the customers. We should be the hardware providers of the new real estate to those software solutions. And I think that's where the future lies. It'll be a different economic model.
Tidjane, how has this translated into changes in your business and your strategy?
Well, it's very interesting. Maybe 2 observations. We just published our global wealth report that we produce every year. 2 main observations. One, inequality between countries has been reducing. So there is less inequality across the globe, but inequality intra-country has been increasing. And to give you just maybe a few numbers, the bottom half of the world population, 50%, owns 1% of the total wealth. The top 10% own 82%, and the top 1% own 45%. So the biggest obstacle you find to globalization, and globalization has been producing this reduction of inequality between countries, is the fact that, especially in rich countries, the people who are the losers of that process are pushing the political process towards a reduction of globalization. And as someone said, it's technology that's been destroying jobs, not trade. But trade is a very visible culprit. It's much easier to push the government to put trade barriers than to have a long-term education policy that's going to promote innovation. It's clear that A is much easier than B, and it tends to be what happens. So I think a big part of the debate and what we need to see happen is, honestly, the word inclusive was mentioned by you, a more inclusive model in the leading countries to get to better solutions. And I'll just mention Switzerland for a second, because I live there now and I run a Swiss bank, and I think Switzerland provides an interesting example of a country that has a 40% debt to GDP ratio, 2% unemployment, and a lot of immigration. There's 5 million Swiss, 3 million immigrants. That's the house ratio in Europe. So a lot of the notions saying that immigration creates unemployment, for instance, are not true when your native population is well educated. So there are a lot of, I think, positive lessons to draw from examples.
Was that only because it's a relatively small country, small population?
Well, that's also a factor, but there are many small countries who are failing. So it's not just the size. It's doing things right, I think, before the size.
John, on the subject of technology, I want to talk about economic indicators, because how accurate is it now to use numbers like GDP, fixed asset investment, retail sales, industrial production to look at, for example, China's growth, when you've got something like 50 million ride-hailing drivers, 5 million food delivery riders, and 3 million courier riders, and so on?
It's useful but very misleading. Very much an example of what just said. If we stay with our original frame of thought, doesn't matter if you're talking about political system, capitalism, socialism.
The 1.0.
150-year plus old theory we've been practicing. If we stay with them too long, we're going to find ourselves being surprised. So digitization is changing everything in a very much accelerated way. So we just need to be aware of this. I like the topic of this session called rebalancing. So there are a few factors. For instance, East and West. Definitely, you call it a shift or rebalance. That's a factor. So Asia or Greater Asian societies will, see leapfrogging because digital technology. People talk about China lifted 300 million, 400 million people out of poverty, and miracle. India is doing that too. I was in India, and one thing that really impressed me was how they utilize digital technology to do a basic thing called digital identity for about 1 billion people in 10 years, all biometric based.
They went from no papers to
Right.
having digital
You
records.
just think about this. This actually solves a lot of what US is still debating about who owns data and how you distribute the wealth as a result of data, which is said to be bigger wealth than oil. And China is in the middle. India was just saying, let's figure out who owns the identity first, and then we could do new development. So I think technological advancement will change how we think about many things. I wanted to build on Tom's point about elimination of nation state. One of the tensions or tension that we have is the fact that we live in a global village, but politics are very much still based on
Nation,
Nation.
borders.
So digitalization will push us very sturdily towards a new global order that is more inclusive. And one of the reasons, and with all the fights, okay, I think it's a temporary, one of the fundamental reasons is what digital does is to allow everybody to connect with everybody directly. So that's why United States president can run his base with Twitter, bypassing his bureaucracy. So is other power, and vice versa. So, never underestimate that power. So digital is putting power in hand of everybody. So inclusive, rebalancing, and the narrow gap of anything is the certain trend.
Ralph.
Well,
Look like-
John, I trust that you're not suggesting that all governments should shut down
Bypass
and just
bureaucracy.
go directly through Twitter to run their countries. I hope not.
I'm very tempted to suggest that.
I would like to just add something to what Tidjane was speaking about, and that is the importance of economic growth to fuel all of the things that we talk about. The economic growth ultimately is the engine that narrows the wealth gap and is combined with proper taxation and governmental policy. It can't do it alone, but you're never going to narrow that wealth gap without having economic growth. And economic growth, it's certainly in the vast majority of the world today, not all, but a good portion of it, and certainly the high achieving or high economic per capita countries is driven by very simply how fast is the population and the workforce growing and how fast is productivity growing. And if you look back over the last few decades, I would argue pretty strongly that what separated growth in the United States versus Europe and what separated growth in Europe versus Japan was immigration. And we all have roughly the same birth rates, and what has really distinguished historically the American economy is the willingness to accept both high talent and low talent workers who have given an extra boost to our economy. I mean, you look at Japan, which is a wonderful country and an absolutely fantastic economy, but in 2050, Japan is going to have roughly 70% of the population that it does today. And just imagine how difficult it is to have an economy that grows, that has a smaller workforce and a smaller population to consume. Very, very difficult challenge. So not only do we, I think, need openness about the freedom of movement of goods and services, but it's also really important to have freedom of movement of people within certain bounds as well.
And when you advise on cross-border deals, are you seeing that digitization is breaking down barriers?
One of the massive challenges today in cross-border transactions is, when you're putting two companies together, both of whom are in many respects already global, very often it requires the approval of 20, 25, 30, 40 regulatory bodies around the globe. And when you're in periods of high tension, whether it's for trade or for various social policies, those almost inevitably get wrapped up into that approval process. So I would say that the two disruptions that we've had, there are clouds on the global growth horizon, the trade, many conflagrations that we've had, and the inability to sort out Brexit in Europe have been a dampener on larger transactions, because if you have to wait a year and a half, 2 years to get a transaction done, there's a tremendous amount of value destruction that can occur in a business that isn't carefully overseen in a rapidly changing world in that period of time. So that's a big risk factor.
Yeah, certainly is. And Tom, I know that you're a longtime supporter and friend of Donald Trump. Do you think China-US decoupling will be hard to reverse?
Yeah, of course. Look, without getting into the political factors of all the great leaders trying to navigate through salvaging and perpetuating their nation state. That's their job. And all of us and all of you in the room are trying to do the opposite. We're trying to weave this tapestry of globalism with various stakeholders, with a social stakeholder, with a financial stakeholder, with a political mind, that all the discussion about the difference between the haves and the have-nots. So I think this is politics, and what will pervade politics is the now current availability of everything in an instant. So most of us, certainly sitting up here, have made a living by trying to arbitrage information. We have a system, we have resources, we have talent, we have some little edge of information or the production of products that makes us more competitive in a global environment. And that world is becoming more and more connected, and information arbitrage is really not a business anymore. Everybody has everything instantly. Larry, who was just up here, one of the largest asset managers, Ralph, the algorithms that are utilized in deciding that are at least as critical as the people who are utilizing those algorithms. So I think that this is all positioning, and that the race has got to be not just to make America great, but by making America great, make the world greater. That's got to be the goal.
Yeah, love your country, but love the world more. And Tidjane, based on, for example, the results of that wealth report, how are you allocating resources and investing to make sure that you're aligning with the drivers of growth?
I think as a result of everything we've discussed here, what you can see is that if you look 10 years ago, the accumulated stock of wealth in the developed countries was about 3 times what it was in the emerging economies. Today, it's probably 20 or 30% more. And if you look at the growth in wealth, more than half of it has happened in emerging markets. So clearly our strategy has been to focus more and more on emerging markets. We've collected $195 billion of new assets in the last 4 years, and the bulk of that, 70% of that, comes from emerging markets. So that's really important. And I know we're getting short on time, so I'll just make maybe a final comment on something we've discussed here, which is the political dynamics. A lot of people lament the return of politics. I'm not sure it's a bad thing, because I think a lot of the issues we're grappling with can only be solved through the political process. And I think that we need to evolve our narrative on globalization. For many years, what we've told people, the victims, quote unquote, of globalization is, look, don't worry, it's good for the world. Okay, but that is not a workable political argument. We need to find answers that work for them individually. When somebody has lost his job, telling him that this is a good thing for the national economy is never going to help. So I think when we talk about inclusive growth, political process, what's been happening, if you take Brexit, the people who voted for Brexit, I think it's well established, will be its first victims economically. That's well established. So it's really changing the narrative, getting to a more positive place, and being explicit, not acting, not sweeping under the rug the downsides of globalization, but addressing them. What we've done, I think, for 20 or 30 years has been overlooking the downside, saying, well, it's so good for the world, it should happen. And the people who are in that downside are basically saying, stop, this doesn't work for me. Find an answer for me, or I'm going to stop the whole thing. And that's why you get Brexit, that's why you get trade tensions. And I think it's important to recognize that and collectively develop answers to address those issues and the downsides of globalization.
Thank you. John, investing in China. Do you think people misunderstand China? Do you think now China is being stigmatized? Do you think going forward China will integrate more? Do you think the China economic model is so different from the mainstream economic model?
Yes, 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 yes. With all the geopolitical shifts and all the technological advancement, I happen to believe that as an investor, we need to think globally and have a futuristic or historical perspective. But investing is stay with the fundamentals of what we learn, which is you have to act locally and live in the present, especially for Chinese investors. Because here we are, China is trying to have a voice in making the new rules globally. And it is experimenting with its own system to solve the inclusion, balancing, sustainable model. Okay. So if you're an investor, you have to live in that moment and be very local to that policy. I am very optimistic about globalization 2.0. But before we get there, there's going to be a lot of fight. And so there's a very old Chinese saying that says, partners, when you are together for long, you're going to have to split. When you are separated too long, you're going to recombine. So that's what we're going through. So China is number one in terms of physical and, more importantly, digital infrastructure. I'm not talking about just roads and the networks. We're talking about mindset. For instance, sense of data ownership, sense of user privacy are all very different. So it's going to march ahead and bring a lot of benefit to everybody. And I think that will have an impact to the world. And that's what we're navigating.
Ralph, you've said that aside from looking to the east, looking towards digital, also look at Africa and South America.
Yeah. Well, I think, first of all, I have to compliment John. When you asked him those 4 questions,
He remembered
that I
all
thought,
of them.
well, I thought it would take him 40 minutes, and it took him 4 seconds. Yes, 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 yes.
It's China speed.
Yeah, I think that, Africa, South America, those are, in addition, obviously, to Asia, places where there's a massive movement to the middle class. And Africa probably the most pronounced of all. I think if you had to place some chips on one continent and then come back 20 years from now and see what you had, that would be a good place to go. I do want to make one comment about this whole wealth gap, which Tidjane talked about. And there are two really profound things that have happened over the last 20-some years. One is that the returns to capital versus labor that gap has widened a lot. I'm not sure that that widens permanently, because at some point labor's power comes back somewhat, but it's a very hard trend to overcome. And the more profound and I think totally irreversible trend is that the gap between the returns to skilled labor and unskilled labor are, I think, permanently widened and will continue to widen. And so the only way, unfortunately, over the long term to address what I consider a very corrosive wealth gap is education at the outset and lifetime training and retraining so that people can have the dignity of a well-paying job throughout their lives.
Tom, concluding thoughts on rebalancing.
I think what we're all saying from such esteemed panelists is we're in an era of navigating a world that has boundaries without borders. And the more we can do as leaders to quicken the lessening of those borders and weave the threads of a tapestry that's integrated, that's consistent, that's connected, that's caring, that has more balance, then economics will follow. I think that's the message.
Okay, on that note, very, very eloquent words from Mr. Barrack. Thank you so much to my panelists. It's been a privilege to be with such wonderful speakers. Tidjane Thiam, the CEO of Credit Suisse, John Zhao, CEO, founder and chairman of Hony Capital, Mr. Ralph Schlosstein, the CEO of Evercore, and Tom Barrack, CEO of Colony Capital. Thank you so much. And thank you for your attention.